Good evening. This is the Elliott Wave daily update for the NASDAQ 100 and the S&P 500 for Wednesday, November the 6th, 2024. And quite the evening yesterday, and lots of different emotions from lots of different people flying in many different directions. But the one thing that seemed to be very clear was the market was pleased with whatever they were seeing. And we saw a massive explosion higher in the equities, a massive decline in the bonds, an eventual heavy decline in the precious metals, an intense rally in the dollar, and Bitcoin absolutely just kind of push itself, I believe, to new all-time highs. Now, the NASDAQ is where I'm going to begin. I'm on the 4-hour chart just to kind of put things in perspective. Now, lucky for me that I was a little bit on the late side in getting this update online yesterday, because those that listened knew or heard that I was doing the S&P and talked about the market breaking above, I believe it was 57.35. Not only did it break above 57.35, it broke above 59.35. And clearly appears on target to reach that 6,000 level. But I'm going to, before I get ahead of myself, I'm going to begin here in the NASDAQ. So I quickly yesterday flipped that down and brought that forward to its conclusion. And whether I like it or not, that response that we got yesterday took care of whether that was a fifth wave or not. And it may not be the prettiest and it may not fit perfectly. I believe it does, being that we were counting a 5-wave C wave down, and we got it. And it did put in a new low, did not get all the way down because this was an irregular, but everything else fell into place. And the launch up and out of this fourth wave definitively told me that we are in minute wave 5 of minor wave 5. Now, here's where I think it starts to get interesting. I have been discussing for quite some time now that the seasonal charts had continued to show day after day after day, week after week, that November should be a dynamic, very strong rally in equities. And lo and behold, today was a very strong rally in equities that actually began on November the 5th, carried over to November the 6th. I believe is going to continue, but at least for the balance of this week, maybe next week, I don't know. Maybe it'll just, go all the way out to November the 20th, which again is that big day for the volatility expiration. And that's where we saw all of those huge positions that I talked about, I think yesterday and the day before, where I was talking about how they were lining up, on the calls and on the puts. And I'll tell you where the 500,000 contracts were sitting on the November 2015 put. And look where that thing went today. We're down. I'm sitting at 16, and we were lower a little bit during today. So, volatility traders, it's like, wow, that, they did plan and position for a pop and then a drop. And that's what just we got. Now, outside of that, in our markets, in our equity markets, once again, within the spiders, within the Qs, the market was breaking above the call walls and all levels before our regular session opening this morning, which pretty much guaranteed in the NDX and in the SPX, we were going to gap. and we gapped, we did. And it did not stop. Now, in the trade room, I was talking about, well, we really don't have anything. And I gave some price levels, and I'll bring it down to the hourly chart so I can show you. That was just so dynamic. But I gave price levels here. Those are what I had left once we started going through some resistance points, some fib resistance, very low level fib resistance. We went through those pretty quick. We had some bigger pullbacks. And anytime we get into a one-way market, we will get, with strength, we will get strength in the pullbacks. And that's pretty much what they did. Now, as a day trader, well, they were worth shorting, but you had to keep everything on a short leash because basically you just kind of bought, held, if you could take the risk, and you were handsomely rewarded time after time after time after time. Now, we are continuing to add to our totals on the day. I don't need to do this because you were all there or amongst us. The Dow Jones up 1,508 points. And it actually was up, I think, 12 or 1,300 at the opening. The S&P up 153 right now. The NASDAQ up 590, almost 600 points. Now, so when I talk about sometimes I say, well, we need a 600-point rally. And is that possible? And you always hear me say, yes, I've seen it. I've witnessed it. Now we're doing it together. They do happen. Now, I'm trying to just kind of look at this and go like, okay, ultimately, that I'm going to go back out to that hourly 4-hour chart. Again, if that's wave 4, I'm connecting wave 1 to 4. What does that tell us? Our first measurement, where wave 5 would be equal to wave 1, comes in at 21,210. Let's take a look. 21,213. 3 points under. I'm like, wow, okay. So that would be my first line where if the market comes up and breaks above 21,213, I'm going to think we're getting towards the end point of this minor fifth wave. Now, if we're looking at this thing, again, bringing it back down to the hourly so you can see the intensity, I believe what we're finishing up here is the third wave. So if we're in minute wave 5, I think what I feel we're finishing is minuet wave 3 of that minute wave 5. If I'm believing that this will be a marker, but we have a solid chance of really the next level after 100, after equality, is 1.618. And we've got some additional in between that go along with the intermediate third and the minor fifth. So what we're looking to complete here is the minute fifth, the minor fifth, and the intermediate third. And that just sets us up, as I've been discussing, to come down in a intermediate fourth wave, going back out to my 4-hour chart. And where would we think that should come? Remember, Elliott taught us a fourth wave will find its terminus, its endpoint, within the price territory of the fourth wave of one lesser degree. I'm counting from an intermediate, so to intermediate fourth, one lesser degree, minor. Where is that fourth? Here. So whether we end up at 21,300 or 21,900, I'm looking for this thing to come back to 17,580 into that area. And that's going to be quite the trap, right? But I'm thinking, okay, maybe we're going to get this through November, and we got December, and then maybe we start to decline. But now we're thinking, okay, well, everybody's thinking this rally is going to be so great, it's going to carry us. And I'm like, I don't. I really do believe in the Elliott, and I believe that the Elliott will take over, just as it did here. That is such a perfect fifth wave, and that's such a perfect launch right out of that fourth. So I have no reason to expect that something else. So, because if we're really this exuberant over the results of these elections that we saw, then the theory would be, oh, well, we should just keep going and going and going because we got it for 4 more years, or at least 2, right? Until we get to the midterms. So, but it can't. It doesn't go that way. In my opinion, it doesn't go that way. We don't go from election cycle to election cycle and then fit it into the market. So I think there are other things, particularly with the new administration coming in. One of the primary goals was to assess 200%, some crazy number, tariffs on our imports, which we know is going to be passed down as taxes on us. So on the goods that we have to buy. Now, if that gets put in, I'm just going to tell you to go back to the last time this administration was in power, and they had a little trade war with China. We sank. We sank like a stone. I'm only looking for an intermediate 4th wave. So if the talk gets really going before the change of the administration, then maybe we get that 4th wave quicker. If not, I think we can get the 4th wave on the threat or something else happening, i.e., with China, with Ukraine, Russia, North Korea, with Israel, Iran, etc. And give us that intermediate 4th wave. We race back up in that intermediate 5th wave again to new all-time highs. But let's be clear on what's going to be finishing then. If we're finishing intermediate wave 5, on top of that, we're finishing a primary wave 5, and on top of that, we're finishing in cycle wave 3. And that suggests that we really start to come down. That could be the tariffs. If I'm just going to, use my thoughts and move out to like what could be behind something that serious, that would be one thing. So we're not there yet. So I'm thinking that if we have or close to finishing a 3rd wave, we may, I think 21,000 is pretty much a given when we're so close. And then we could get even up higher and maybe up to this first line of defense, or even this line of defense, before we start to come down in a 4th wave and then go back up in a 5th, which will begin to take us up here. Now, once I have that 3, 4, I got one more layer that I can put on, and that will be this one, and then shoot it up to see where we start to match up. And then we're going to start to zone in on areas where this may all complete. Now, what is surprising for me is that it's happening so early in November. But structure all falling into place. So we either get it now or they keep going. And this would be, and that's only 2.618 for minute wave 5, not out of the books, right? So we have first defensive resistance, second group or cluster of defensive resistance, and the third. So all possible with the strength that we saw, unless it wanes real quickly. Yeah, this market can go, and it could go, and it could go. So again, looking for the completion of that intermediate 3rd, and I'm looking for an intermediate 4th. And it doesn't make any difference how high we get. I'm going to continue to look for it to come back to the minor wave 4, and you just saw where that is. So it would be a pretty serious drop. So either this carries on. I mean, I can't say with 100% certainty that it is minuet wave 3. It could be minuet wave 1, and we really do have a whole bunch to go. A couple thousand points to go. We'll find out. And I'm not telling people to position. I'm not telling people to do anything. I'm taking this day by day. And so And I got to keep it that way for me. But again, each one of us makes our decisions. Each one of us decides how we're going to trade. One more thing I want to say before I move on, that the levels, the capital flows, the gamma flows, the options flows really are very important. They kicked in overnight. They continued today. They will be readjusted as we begin tomorrow. We'll find out more later this evening, and then we'll get more tomorrow as to where these levels should be coming in. And that's really going to be in control for tomorrow. We saw massive moves in some of these particular stocks. It's Tesla up 37. Tesla up 37. The spiders up 14. The SMH up 650. NVIDIA up 570, new all-time highs. Netflix up 16, new all-time highs. Microsoft, good day. Meta, sorry, you were down. But we saw some decent days all the way across the board. And I'm suspecting that that's going to continue. All right. So moving averages. So as we left them yesterday, they were looking iffy. Well, look now. Still chugging higher. The 200, the 50. Look at that, turning into a big smile now. Okay, we're back on. And the 8 definitely. The 20 definitely. The 20 is trying to, I mean, the 8 got back above the 20, which is a good sign. Look at that bar. Wow. Really, really intense. I mean, as a trader, when you see that kind of move, you're like, wow. Okay, that didn't work. So let's go here. And the S&P. The S&P is kissing right now the 100, the equality of minute 5 to minute wave 1. Equality, equal, right there, 57, 59.67. New all-time high in the ES. That is to be expected as we come up in this 5th wave. That's the daily. Let me just go over the moving averages here as well. You can see them. We got the 8 back above. We got the 20 turning back above. We had it sitting right at the market, and then it came up, broke it, and it just never looked back. We have the 50 turning higher again after turning flat. We have the 200 not really doing anything or going flat, but still has that upward trajectory. So all is sitting and looking good, and that was a bullish engulfing bar, and then just engulfed any air that happened to be here, because there was the previous all-time high was there. We broke it today by 40. This was 27, 59.27, 59.67. Wow. It was pretty spectacular. Okay. Now, let me bring this down to the 4-hour chart, and we'll take a look. You can see, look at the intensity of that rally. And on the 4-hour chart, we had one pullback. So basically, from overnight and from our start, yeah, there were some pullbacks in between. This is a 4-hour chart. If I drop it down to the hourly, we got some, you can see them. You can see our pullbacks. Now, we went through this pretty early. I left it up simply because I needed a marker, and it went through it. So I'm going to get rid of that. Now, whether or not this level completed wave 3, so minuet wave 3, right? Because there's the 5, 9. I got the 4 underneath it, the 5 and the C. Let me pull these up just a tad so they're all kind of grouped together, and you can see them. So we're inside that 5th. And it's kind of interesting because I'm like, well, okay, well, is this like 1, 2, and then 1, 2, 3, 4, 5, 3, A, B, C, 4. And we're now in that 5th, which is going to keep going because this is not complete. So I think we might just be finishing up the 3rd wave, minuet wave 3 of minute wave 5, of minor wave 5. So we may have thought, gee, what's going to get it to 6,000? Well, a good knock on the door saying we're on our way. clean up. And boy, did it. So we are closer to 6,000. And I feel pretty strongly, again, 6,055 is the JP Morgan collar where the calls are sitting. And I do believe they're going to go up there, and I believe they're going to challenge it, if not break it, before this minute fifth wave is done. And then in turn the minor fifth wave, and in turn their intermediate third wave. I think they're going to go up and they will challenge that, if not break it. So what we have, 100%, 59.67, visiting it right there at the close, closed, pretty much touching it and just closed just under it. 1.618 is 61.18. That pushes us through that collar and on up. And I would think that there has to be some type of an adjustment because we're early. If it was coming towards the end of December when the position expires, then I think there's some workarounds, but we'll see. We'll see. Keep your eyes on it. It's about 40,000 contracts. And if you're just tagging it under an options map, you may see them move it, or they'll be using other options, to roll it up or just to do whatever they need to do. But I do think that's going to get challenged. So S&P, we definitely will probably get another pullback, and I think that's a good marker right there because that's an ABC. So I would be looking at least 50, wherever how high we get, that a pullback should likely bring us back to 59. But then we'll be able to put additional markers if we go from there. Actually, we would take it from here if we're looking for a wave 4 and inside this. If we get up, you're going to take from there to wherever this finishes down, and that'll give you 382 to 50%. That's about it for a fourth wave. Not looking for a whole lot more. Same deal though. If this is wave 1, boy, we got a whole lot more to go. So right now, my focus is at 6,055 and 6,100, and then being done. And then we have a really falling off the cliff, because here we're looking, if we get up to 61, what are we looking for in terms of an intermediate fourth wave? 50, 51. And we're looking for something to come back to that low, 51.77. That's close to 1,000 points. So that's a lot to do it in an intermediate fourth wave. And it'll be a big ABC. So I think we got more, obviously, to the upside. But we likely going to need some pullbacks. So you should see, even this is on the hourly chart. Boy, we were pretty overbought, came down, relieved it a little bit, now finishing up back in it. So, and don't forget that, an hourly chart, it can stay overbought. A 15-minute, 5-minute, 2-minute for sure can stay overbought or oversold for much longer than you would expect. But we start getting up to the daily and the weekly, they too, but that the longer they stay overbought, the more harsh or more, quick and painful, likely, will that correction be. Now, so our levels coming up out of here, I don't really have any. If I had to kind of start putting something on this, boy, I'm going to use something that may or may not really work, but just to kind of give something. And yeah, it just takes us up almost to 6,000. And that would make sense to finish this move, and then we pull back again. So it gets more difficult. Where do you want to pin, the resistance? We've never been up here. So it's going to get a little cloudy until we can work internally within the move. And I don't necessarily have any points. So right now, 59.67, then we have that 59.91, and then of course 6,000, big round number, 6,055 collar. So those I think will be available as well. All right, tomorrow on Thursday, we have we have on store initial jobless claims, U.S. productivity wholesale inventories, FOMC interest rate. Aha, big day. And you know what? I think it's really going to be a difficult day for our friends and family at the Federal Reserve. The bonds were down 2. The 30-year bond was down 2. The 30-year auction came off at 4.6. So it went up. So much for lower rates, right? As interesting as all that gets. And then we also have consumer credit at 3 p.m. So Fed decision at 2 p.m., wholesale inventories in the balance, 8:30 a.m. and then 10 a.m. And the next update will be on Thursday, November the 7th